Today we're going to talk about the mutual fund, but we're also going to discuss seg funds and how they differ from mutual funds. Hey everyone, a mutual fund is an investment that is a pooled amount of money people throw into, and there are different funds for the different risk tolerances that people have. So this is a good step. It's a much better step in my opinion than a GIC like I explained last week. And the benefit of a mutual fund is that because you now have different risk tolerances, your allotted money can now be placed in either a high risk, medium risk, or low risk. You can pick the different risk tolerances that you want the allocation of that money to go into. So it gives you flexibility. The other bonus of a mutual fund is that it provides an actual rate of return. Or it can. There are some funds that are performing very well and they are gaining, unlike a GIC, they're gaining the amount of return that can keep up with inflation. The benefit also of a mutual fund is that it's flexible. And so as your risk tolerances vary, that investment, if it's in a mutual fund, can be adjusted accordingly. Meaning that if the markets are all the way down, you can actually change your funds and everything else like that. But then that begs the bigger question is what is your strategy to begin with? And are you okay with certain losses and everything else like that? Don't get a high risk mutual fund if you don't want to ride the highs and the lows. And if you think that that's the only way that you're going to be able to retire is if everything is in a high risk. This is again part of your portfolio. You need to figure out the strategy before you purchase the investments. The other way that the mutual fund works is now you actually have a thing called professional money managers managing those funds. Unlike a GIC where it's guaranteed a certain amount, you don't really need a professional money manager to take care of those funds. A mutual fund allows you to pick certain funds that have specialized people making sure that they're picking certain companies and their stock and they're working for you. And that's why there's a thing called MERs, management expense ratios. Essentially, the thing that everyone from Questrade and everything else is saying that is a bad thing, right? Because of all the fees. So that's where people are like, well, I don't want to put my money where I'm going to be charged fees. You know what? There is a huge benefit to having your money with someone that has gone to school and that is their sole responsibility to make sure that certain funds are making or and are going to be making you money instead of investing for yourself. So don't be against fees. Now, those fees, as I will soon talk about, in a mutual fund, there's also some hidden fees. Estate, lawyers get involved and everything else like that. So that's why this other discussion is also about segregated funds and how it's very much similar. Let's sum up what a mutual fund is. A mutual fund is pooled amount of investment, and you get to choose the kinds of investments that you want to be in. So it can be adjusted to your risk tolerance. The other thing with mutual funds is it's invested in the market, which is good. A rate of return is possible. However, security, you don't really have much because, again, unless you're in a very low volatility minded fund, you're not going to get the rate of return, right? But there is no security in that sense, right? You can't invest 1,000 and be guaranteed 1,000 at the end because you don't know what the markets are going to do. Those are the benefits of the mutual fund. Now, a segregated fund is very similar. However, they differ the way that it would be taken care of on estate and passing. So the difference again between a mutual fund and a seg fund is that the mutual fund is in the securities and the segregated fund is under the life insurance. Essentially, it gives you a little bit more of protection and it also gives you certain guarantees, which you could not get in a mutual fund. The only way that you can purchase seg funds is through a life insurance agent. So it's under the Life Securities Act, meaning that it's segregated from the financial sort of sector and the Securities Act. The guarantees that you get, I'm not going to dive into exactly how they all work and the different aspects and ratios, but essentially the guarantees that you have is you have a maturity guarantee, a death benefit guarantee, you get to bypass probate, which if you guys don't know what that is, it's huge when your estate needs to settle. So essentially, it bypasses your estate, which is huge. So your beneficiaries get your money right away. There's no fees as far as paying a lawyer and all these other things because the life insurance agent that was your agent actually deals with making sure that your beneficiaries get the check because you don't need anybody else involved. I've had to pay out one of these segregated funds for a client of mine that passed. I'm gonna be honest, it was difficult to deal with. However, I was very happy that it was very straightforward, and his death benefit guarantee actually helped the his beneficiaries, his loved ones, receive the money that he put in. So they never lost any money. The market was actually down at the time of his passing, but his actual amount that he invested went all to his beneficiaries, so they never lost any money. I would say if you're an investor and you are risk adverse but want a possible rate of return like a mutual fund would offer, then the segregated fund would be a better option. However, most people don't know about the segregated fund because banks don't provide those things for the most part, and it's something that you need to ask for. So a life insurance agent is the only person that can do that for you. Now, a lot of people would say, well, those seg funds, they have much higher fees. Take a look because not every seg fund has a higher fee. Now, the only reason that you would have a higher fee is because of the security that you want from your investments. But if you're willing to look at all the options and how everything works, it's not just about the fund, right? It's about how that money is going to be treated later on. So there's a much bigger dive that we can do into here and why for some people a mutual fund is okay, but you know what? If the same fund is here in a seg fund, why wouldn't I take the seg fund? Would I be okay with a 0.05 increase in an MER if I know I have a guarantee 15 years down the road or on my passing that my beneficiaries are going to get exactly what I've invested regardless of what the markets are going to do? That's only something you can decide. These are all conversations that you need to have with a professional. You shouldn't be diving into anything unless you're 100% sure, like we've been talking from the start. Not everyone is a cookie cutter situation. Not everyone's going to choose the same investment, not the same fund. You can have GICs and mutual funds and seg funds. All of these things can happen. The reason I wanted to cover mutual funds and seg funds today is because I realized that this mini series is going to have to talk about things like Questrade and crypto. And I want to cover that in the next video. That is something that you would think that I'm opposed to or something else like that. But again, this is about education. I want everyone to know what the benefits are and the downsides are of the investments and the vehicles that are available to the average Canadian. Because not everybody even knows this. This is something that should be taught in schools. If you're going to invest your money, how do these platforms work? How does a GIC work? How does a mutual fund work? How does seg fund work? How does direct investing work? And so that is the next video. We are going to talk about direct investing. And then a little preview of what we're going to talk about in the last video is how all of these platforms and all of these vehicles get taxed. And that is something I'm very excited for. But stick with me because the next video is about direct investing. So again, thank you for liking, thank you for subscribing, thank you for commenting, and I look forward to the next video. If you got any comments, make sure you DM me on Instagram or post down below uh, the things that you're thinking about and any other future videos that you want me to make about money and everything else like that, because this is something that I love to talk about. And I think more and more people need to know just the basics. Tommensense, because common sense isn't so common.